Okay, students, let's start. That is our second live revision class, tax September 24th. Yesterday, we did discuss how to calculate income tax in case of non-saving income and saving income as well. Let me just give you one small question and then we'll go ahead. And let me tell you one more thing. All the tax rates and bands, they will be given to you in exam. All the tax rates and bands, they will be given to you in exam. Okay, you should know this. Let's say Mr. X is having employment income. Assuming 10,000. Saving income is 50. Please try to calculate income tax liability. Try to calculate income tax liability. Employment income, we know that employment income is a non-saving income. And saving income is saving income, there's no doubt. Total. Employment income is 10,000. Saving income is 50. So the total is 60,000. Personal allowance. Obviously, first we deduct the personal allowance from the non-saving income. Total personal allowance is 12,570. So 12570 will be deducted from here. Taxable income. 50,000 minus 2570. I'm getting 47,430. Income tax liability. Okay, answer. One student has shared the answer. 10,332. Let's see. Income tax liability. Can I say the taxable income in the column of non-saving is 0? Taxable income in the column of non-saving is 0. It means that entire 5,000 starting rate band is available. Entire 5,000 starting rate band is available for the saving income. So starting rate band, saving income, 5,000 to 0%. Obviously 0. After that, we need to decide now. Individual's tax paying status. If individual is a higher rate taxpayer, then nil rate band is 500. In case of basic, it is 1,000. Look at the amount 47,430. By looking at 47,430, we can easily decide one thing. This individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band for the saving income. Just 500. Nil rate band. Saving income. So nil rate band, saving income 0. Now, let's see how much space is left in the basic rate band. Basic rate band. The limit of the basic rate band is 37,700. 5,000 we have utilized in starting rate band. 500 we have utilized in nil rate band. 37,700 minus 5,000 minus 500. So still we have a space of 32,200. Obviously now applicable rate is 20%. 6,440. Taxable income is 47,430. We have taxed 37,700. Now let's see how much falls in higher rate band. 47,430 minus 37,700. I'm getting 9,730. 9,730 into 40%. 3,892. So great. Income tax liability is 10,332. So income tax liability is 10,000 simply 332. Okay. Now let us introduce one more, that is dividend income. So non-saving, saving income. Dividend income is dividend income, obviously. Basic rate, £1 till 37,700. 20, 20 and 8.75%. I have already mentioned at the start of this class, these bands and tax rate, they will be given to you. Higher rate, 37,701 goes till 1,25,140. Applicable rate is 40, 40 and 33.75%. Finally, additional rate. One lakh 25,141 plus above. Rate is 45, 45, 39.35%. And we have already discussed in case of saving income, the concept of a starting rate band, the concept of nil rate band. If someone is a basic rate taxpayer, gets nil rate band of 1,000 for the saving income, high rate taxpayer gets nil rate band of 500 for the saving income. But when it comes to dividend, every individual, irrespective of tax paying status, every individual, irrespective of tax paying status, gets nil rate band of £1,000. Every individual gets nil rate band of £1,000 in case of dividend income. Okay, now non-saving, saving income, and dividend income. The logical sequence of personal allowance is number 1, number 2, and number 3. And when it comes to calculating income tax liability, first we apply income tax on non-saving income, then we go for saving, and finally we go for dividend income. This is the sequence of calculating income tax liability. So sequence of personal allowance and income tax liability is exactly same. Okay, now let's say we have Mr. X. Property income 30,000. Saving income, let's say 20. Dividend income, let's say 10. Please, every one of you, try to calculate income tax liability. Then we'll solve together as well, but I want you to at least try. In this question, we have all 3 sources of income, that is non-saving, saving, and dividend. Property income is a non-saving income. Saving income is 20,000. Dividend income is 10,000. So the total is 60. Personal allowance 12570. One, 2,570. $30,000 minus 12,570. 17,430. 20,000. 47,430. Okay. Non-saving 17,430 obviously falls in basic rate band where applicable rate is 20%. 17,430. 3,486. Now, can I say the taxable income in the column of non-saving, it is more than 5,000. Since it is more than 5,000, no issue of starting rate band. Now let's think for the nil rate band for the saving income. Look at this 47,430. Obviously, this 47,430, it is more than the limit of basic rate band, which is 37,700. Can I say that is why this individual is a high rate taxpayer? Whoever is a high rate taxpayer gets nil rate band of 500 only. Now let's see how much space do we have in the basic rate band. The limit of the basic rate band is 37,700. Out of that, we have utilized 17,430. We have already also utilized 500. Let's see how much is left. 37,700 minus 17,430 minus 500. We are having a space of 19,770. Can I say still in basic rate band, we do have the space of 19,770. So the remaining entire saving income actually falls in basic rate band. And the remaining saving income is 19,500, where applicable rate is 20%. So 19,500 into 20, 3,900. Now, we need to tax dividend income. Can I say in case of dividend income, we have already decided one thing? Can I say irrespective of taxpayer status, every individual gets nil rate band of £1,000. Now there is no space in the basic rate band. Entire space we have utilized how? Out of 19,770, we have utilized 19,500 of the saving rate, saving income, and can say obviously the remaining limit, whatever is left, it is utilized by the nil rate band. So obviously there is no limit in the basic rate band. Let me repeat, basic rate band is fully utilized. We do not have any space in the basic rate band. Logically, after utilizing 19,500, the remaining limit was only 220. Obviously, this 1,000 easily covers this 220. Now, whatever dividend income is left, it falls in high rate band. And when dividend income falls in high rate band, applicable tax rate is 33.75%. High rate band dividend income 9,000. So 9,000 and then this. I'm getting 3,037.5. So make it 8. Let's see what is the final answer. 3,486. 3,900 plus 3,038. Students, I'm getting 10,424. Is this clear to everyone? Yes or no? Please reply. Is this clear to everyone? Yes. Students, you should not be making mistakes seriously, because this is a revision classes. Obviously, you have seen number of lectures, but it's okay. If you're making mistakes right now, it's okay, but do not make mistakes in exam, obviously. Making mistakes in exam is going to be very costly. Now, let's go ahead and let me introduce a few more things. We have discussed that in UK, only those individuals are required to pay income tax. Their income is more than 12,570. And we know that 12,570 is called personal allowance. Okay. So only those individuals, they are required to pay income tax. Actually, they have income more than 12,570. But now, what about those individuals? They are really wealthy. So should they get benefit from the personal allowance or not? So HMRC had to decide on this. So the way back they decided, they come up with a solution. The solution is for wealthy people, not to get benefit from personal allowance. HMRC has given the solution. The solution is if adjusted net income is more than equal to 1,25,140, then logically the personal allowance becomes zero. Repeat. Whoever is having adjusted net income more than equal to 1,25,140 will get personal allowance zero. How do we calculate adjusted net income? First, you have to take the net income. Simply less add. You need to just deduct gross gift aid donation. Gross gift aid donation. We'll see that how it works. Less gross PPC. Gross personal pension contribution. The final answer is ANI. Now, if this ANI exceeds 1 lakh, then your personal allowance starts reducing. For example, if ANI, I'm assuming adjusted net income is, let's say, 1,10,000. Assuming adjusted net income is 1,10,000, then how much personal allowance individual will get? The limit of the personal allowance is 12,570 less adjusted net income, which is 1,10,000 minus 100,000, which is fixed for the formula, into 50% or 1/2, it's the same thing. We'll get 5,000. So this individual will not get the personal allowance of 12,570. This individual is going to get less than that. I'm getting 7,570. Okay. Let's say adjusted net income is 1,15,000. Student, please quickly answer. How much personal allowance this individual will get? Please attempt quickly. 5,070. Okay, let's see. Personal allowance limit is 12,570. Less 1,15,000 minus 100,000. 7,500. I'm getting 5070. Agreed? That's correct. You answered. Now, tax implications for the gross gift aid and gross personal pension, they are exactly same. Both of them, gross gift aid donation and gross personal pension contribution, both of them, they work exactly in the same way. But most of the time you will see in your exam, even in your kit, gross PPC. But you should not be surprised if gift aid also comes, because both of them, they exactly work in the same way. Now let's see. Basically, in case of personal pension contribution, whatever individual pays, it is 80%. Repeat, in case of personal pension contribution, whatever individual pays, it is taken as 80%. And logically, 20% is paid by HMRC. And that's a benefit. Obviously, when you are contributing, so you are trying to build up funds for your pension age, for your retirement age. So whatever you are paying, it is 80% into that fund, 20% will be paid by HMRC. That's a benefit for you. Second, gross PPC reduces adjusted net income, which we have seen. Logically, if your adjusted net income is either 1 lakh or less than that, then your personal allowance does not reduce. If adjusted net income is less than equal to 1 lakh, then personal allowance is 12,570. So the second benefit is gross personal pension contribution actually reduces adjusted net income. Third benefit. The third benefit is basic rate band. High rate band. Basic rate band limits ends at 37,700. High rate band ends at 1,25,140. Now listen. In case of gross PPC, we add gross personal pension contribution here as well as here. So logically, your basic rate band limit will increase as well as your high rate band limit will increase. So the third and the last consequence is, by gross PPC, your basic rate band and high rate band limits, they will increase. And that's a benefit. There are three tax consequences of PPC. Number one, whatever individual has paid, it is treated as 80% and 20% is paid by HMRC. Second, your adjusted net income is reduced by gross PPC. Third and the last, basic rate band and high rate band limit will increase by gross PPC. Please listen. Gross gift aid donation exactly works in the same way. Same way means gross, in case of gift aid donation, whatever individual has paid, it is 80%, 20% will be paid by HMRC. Second, with the gross gift aid, your adjusted net income reduces. Third, basic and higher rate band will increase by gross gift aid donation. Okay. Let's say Mr. X is having, and let me tell you one more thing. If examiner says Mr. X has paid personal pension contribution, nothing is mentioned, we always treat it as 80%. Then you have to gross it up. So whenever nothing is mentioned, we always treat given personal pension contribution is 80%. Let's say employment income is 50,000. Saving income is 20. Dividend income is 10. Personal pension contribution is 10. We have already decided nothing is mentioned, then given personal pension contribution is 80%. You have to gross it up. Calculate income tax liability. Please, student, try this. Whatever you think is right, but try to attempt this. We have employment income, all the three sources of income are here. That is non-saving, saving, and dividend income. Saving income. Non-saving income is 50,000. Employment income is non-saving income, no doubt about it. Saving is 20. And dividend income is 10,000. Total is 80. Personal allowance, obviously, we need to deduct from the non-saving 12,570. See. So 50,000 minus 12,570. I'm getting 37,430. $67,430. Obviously, first we have to tax non-saving. Can I say entire non-saving income 37,430? Obviously falls in basic rate band, but now basic rate band does not end on 37,700. Normal limit is 37,700. Can I say this 37,700 will be added? Will increase by a gross PPC. Since in the question only PPC is mentioned, so we'll say it is 80%. We have to gross it up. 100 upon 80, we'll get 12,500. So logically, basic rate band will increase by this. 37,700 plus 12,500. Now basic rate band limit is 50,200. Obviously higher rate band limit will also increase, but taxable income is only 67,430. So obviously, after basic rate band, whatever is left, obviously that falls in higher rate band. Otherwise, we know that 1,25,140 plus it will rise by this. So new high rate band limit in this question, which is not required because the taxable amount is very less, but still, for the sake of understanding, your high rate band limits goes till now 1,37,640. So obviously entire 37,430 of the non-saving falls in basic rate band. Non-saving 37,430. 37,430 and then 20%. 7,486. Since the taxable income in the column of non-saving, it is more than 5,000. So for the saving income, there will be no concept of starting rate band. But we have to think for the nil rate band for the saving income. By looking at 67,430, which is in fact more than 50,200. In this question, to decide the taxpayer status, we are not supposed to compare 67,430. Why? Because in this question, basic rate band limit is not 37,700. Now the basic rate band limit is 50,200 in this question. So that is why logically I'm comparing 67,430 with 50,200. So I'm saying 67,430 is more than 50,200. And obviously it is less than 67,430 is less than 1,37,640. So we can easily decide this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band of 500. Okay. Now let's see how much space is left in the basic rate band. Basic rate band goes till 50,200 in this question. Out of that, how much we have utilized? We have utilized 37,430. We have utilized 500. Let's see how much is left. We are left with 12,270. So still in the basic rate band, we have the space of 12,270. Basic rate band saving income. 12,270. Applicable rate is 20%. I'm getting 2,454. Now, obviously, we'll move towards higher rate band. Saving income. Saving income amount is 20,000. Out of this 20, we have already taken 500 in the nil rate band, 12,270 in the basic rate band. How much saving income is left? Seven two three zero. Just 1 minute break. Azan is sounding right now. Okay, students. So how much was left? 7230. Applicable rate is 40%. 723. 28. For dividend income, we have already decided every individual gets nil band of £1,000. Obviously, the remaining dividend income, which is 9,000, that falls in higher rate band. And these tax rates, they will be given to you in exam as well. Tax rates and bands. Applicable rate is 33.75%. So 9,000 into, with a little bit rounding off, I'll get 3038. $7,486 plus 2,454 plus 2,892 plus 3,038. Students, I'm getting 15,870. Let's see whose answer was the same. Anyone with the same answer? Great. We have 2 students and got the same result. What about others? That is your income tax liability. Okay, now student, please listen carefully. We have a prayer time. So there will be a break of, I would say, around 30 to 35 minutes. It is up to you. Stay online, go offline, it's up to you. Before resuming the class, but within 30 to 35 minutes, I'll resume the class. And before resuming the class, I'll drop the message in your respective WhatsApp groups. Okay. So class will resume within 35 minutes. Okay, students, let's start. You should know the list of exempt income because that can be asked in multiple choice question. So obviously, you need to cover each and everything. So let me just quickly write the list of exempt income. Exempt income is on which there will be no tax. Exempt income is, let me check the internet. Change the internet. It is changed. Great. Backup, we have backup internet. Fine. So list of exempt income. Number one is interest from National Saving and Investment Certificates. Interest from National Savings and Investment Certificates. Second, interest received from individual saving account, ISA. ISA, individual saving account. If the interest income is coming from ISA, it will be mentioned in the question. Income which is coming from gaming, winning, battery, lottery, all these are exempt. So gaming, winnings, betting. Betting is legal in UK. Lottery and premium bonds. Premium bond winnings. Interest on repayment of tax. Let's say you have paid more tax. HMRC is going to refund the tax, but including with that refund, they will give you the interest. That is exempt. Interest on repayment of tax. These are the few, I would say, popular names, but there are other as well, like, for example, state benefits paid in the event of accident, sickness, or disability. State benefits paid in the event of accident, sickness, or disability. A scholarship paid to taxpayer is exempt. Scholarship paid to taxpayer is exempt. But obviously, while remember one thing is scholarship paid to the taxpayer family member is taxable. But a scholarship paid to the taxpayer's family member is taxable. But again, I would say first four are more important. I would say almost 100% in the past paper you will see in your latest kit, obviously, you will see the first four. So first four examples are extremely important. After that, ISA, individual saving account. Actually, the interest income which is coming from ISA, that is exempt. But there's very important point. What is that? Try to understand. Actually, ISA, individual saving account, it has a limit also. The limit is actually £20,000. ISA limit is £20,000. Now, what do you mean by £20,000? Actually, if someone has deposited £20,000 or less than that in ISA, whatever interest income is coming, it is exempt. It is not necessary, and it is not compulsory that you have to keep entire £20,000 in individual saving account in the form of cash. In fact, ISA limit can be utilized like this. Some of the limit can be utilized in the form of cash. Let's say you have deposited some cash in ISA and some shares. And 50-50, it is not necessary. It could be in any proportion. But what I really want to say is, in individual saving account, it is not necessary that you have to deposit only. You have to Just a minute. It is not necessary that you have to keep entire 20,000 pound in the form of cash. It can be split in any proportion. It could be in the some of the limit could be utilized in the form of cash, some of the limit could be in the form of shares. Now, please try to understand. If interest income is obviously, if you have deposited cash in ISA, then you will be getting interest income. Then interest income is exempt. In case of shares in ISA, if dividend income is coming, then that dividend income is exempt. If ISA shares we have sold, on the disposal of shares, you will get capital gain, then capital gain will be exempt. Disposal of shares from ISA, then capital gain is exempt. Now, there's one more thing. What is that? The limit of this 20,000. The limit of this 20,000 can be increased. The limit of this 20,000 can be increased. How it can be increased? Please listen. In case of obviously husband and wife, additional allowance. ISA limit of 20,000 pound will be extended by ISA deposit balance of the deceased person. Let's say obviously we are talking about couples. If one of them is deceased and that person has utilized ISA limit of 15,000, then for the surviving spouse, the limit will be 35. So additional allowance, ISA limit of 20,000 pound will be extended by ISA deposit balance of the deceased person. So it is very important. Okay. Now what else? Let's come here. Let's say employment income is 1,50,000. Gross PPC is 30,000 required. I want every one of you quickly just calculate income tax liability. Please, every one of you, try. Let's try. Employment income, we know that it is a non-saving income, okay? Employment income is a non-saving income. We need to check how much. It's 150. We need to check how much personal allowance is available. Working one. Normally, the personal allowance limit is 12,570. less. Can I say adjusted net income will be 1,50,000 minus 30? Adjusted net income will be 120, am I right? Adjusted net income will be 1,20,000. From this 120, we'll deduct 1 lakh into 50%, 1 upon 2, it's the same thing, I'll get 10,000. So available personal allowance is 2570. Taxable income. It is 1,47,430. Now basic rate band limit will be 37,700. Can I say plus? This will be the basic rate band limit because we know that basic rate band and high rate band limit will increase by gross PPC. 1,25,140 plus 67,700 into 20%. It is 13,540. So from 1,47,430, let us deduct 67,700. Whatever is left, entire amount actually falls in high rate band. Because now the high rate band ends at 1,55,140. Obviously, look at the taxable income, which is just 1,47,430, which falls within the limit of high rate band. $67,700. 1,47,430 minus 67,700. I'm getting 79,730 into 40%. 31,892. So 13,540 plus 31,892. I'm getting income tax liability 45,432. Is there anyone who was having the same answer? That's nice. Students are getting the same results slowly and gradually. That's nice to see that. Okay, now. One more concept which you should know that that actually relates to the jointly owned asset. If income is coming, let's say there's a property income. If the income is coming from a jointly owned asset for husband and wife, nothing is mentioned. We will always split the income 50-50, irrespective of their actual ownership. If husband and wife, they want that income should be shared according to their actual ownership, it can only be done if both of them combine make an election to HMRC. Only then income will be apportioned between husband and wife according to their actual ownership. So normally income is shared 50-50, irrespective of actual ownership. Remember that. Irrespective of actual ownership. Income could be shared according to the actual ownership, but for that to be happened, they have to make the joint election. Means husband and wife both, they have to go and make the joint election. Only then it is possible, otherwise it is not possible. Okay, now one more concept, that is in case of husband and wife, they can even transfer 10% of the personal allowance, which we say it is a marriage allowance. But how does marriage allowance work when it is available? Let's discuss everything. Marriage allowance, 10% of personal allowance, which is 1260. Obviously, if you go for exact 10%, it will be 1257, but HMRC says no, take 1260. Marriage allowance, that is 10% of personal allowance, 1260, can be transferred between husband and wife when both are basic rate taxpayer. That's a condition. Marriage allowance is the 10% of personal allowance, which is 1260, even though we know that exact value is 1257, but ignore that. HMRC says you can go for 1260. But a very important point is husband and wife both, they have to be basic rate taxpayer. Another point is when we transfer this personal allowance 1260, it does not mean that recipient partner personal allowance will increase by 1260. No. Actually, the recipient spouse income tax liability will be reduced. So how the marriage allowance works, in case of marriage allowance, recipient spouse income tax liability will be reduced by 1260 into 20%. I'm getting 252. Basically, you are not supposed to increase. The presentation is you cannot increase the personal allowance of recipient partner. You will always reduce the income tax liability of a recipient partner by 252. But a very important point is marriage allowance comes into action only when husband and wife both are basic rate taxpayer. Second point is exactly 1260 will be transferred. Exactly. For example, let's say one spouse has utilized nearly all of the personal allowance, only 60 is left, 60. You cannot transfer 60. Either you are going to transfer 1260 exact amount or zero amount. Marriage allowance if someone wants to get marriage allowance, then exactly 1260 will be transferred. You cannot transfer less than that. You cannot transfer more than that. For example, husband, wife, assuming husband is having income of only 8,000. Obviously, look at this 8,000. If husband has the total income just 8,000, so obviously we can say that husband is not in a position to utilize the entire personal allowance. So the tax planning is they should go for marriage allowance. Let's say the wife is having the income of, assuming 25,000. So definitely in this case, we will give them the tax planning. The tax planning is husband should transfer 1260 of his personal allowance to his wife. Now let's say we are required to calculate income tax liability for the wife. Obviously, husband is not paying any income tax liability. Entire 8,000 is covered by the personal allowance. So the requirement is, let's say, calculate income tax liability for the wife. How it works, I just want to tell you marriage allowance. Personal allowance is 12570. So 25,000 minus 12570. Taxable income is 12,430. Income tax 12,430 into 20%. I'm getting 2,486 less marriage allowance relief. One two six zero into 20%. 252. So the final liability is 22. The concept is, the rule is, the presentation is, you cannot increase personal allowance amount for the recipient spouse. You are just allowed to do one thing, and that is to reduce the income tax liability by 252 of recipient partner, which I have just done it in front of you. You can see that. It is exactly in front of you. Okay. So just give me 1 minute. Let me discuss one more concept for the today's class. But you need to give me 2 minutes, please. Just 2 minutes. Okay, let us quickly discuss the rule of child benefit income tax charge. And let me tell you, this child benefit income tax charge rule, it will be given to you in the tax rates. Child benefit income tax charge. Obviously, in UK, the government is really good. They do take care of, I would say, children as well. Now, for example, let's say the government has given child benefit to the parents, but the rule says if any one of them is having, it's not necessary, either wife or husband, could be any one of them. If any one of them is having adjusted net income more than 50,000 pounds, and if adjusted net income is more than 50,000 pounds, in that case, child benefit charge will arise. But obviously, child benefit charge will only arise if they have received the child benefit. Let's say examiner says that they have received the child benefit. Number one. Number two, In case of husband or wife, whoever is having adjusted net income more than 50,000. Now the question is, sir, what if both of them are having adjusted net income more than 50? In that case, we'll take the adjusted net income of the spouse who has the higher income. Let's say one of them is having adjusted net income 55, another one is having 57, then we'll go for 57. So let me repeat. In case of husband and wife, whoever is having higher adjusted net income, we will take higher adjusted net income of that spouse to calculate child benefit charge. How do we calculate CBC? It's very, very simple. CBC percentage, we calculate adjusted net income minus 50,000. And let's say divided by 100. Whatever comes, we say it is a percentage. It is a CBC charge. Okay. If adjusted net income is more than equal to 60,000, then entire child benefit becomes CBC charge, because your percentage will be 100%, or it cannot be more than 100%. For example, we have Mr. X assuming employment income is 53,000. Child benefit received is, let's say, 2,000. Required is what child benefit charge does. Actually, child benefit charge will increase your income tax liability. What CBC does, it increases your income tax liability. Required is we just need to calculate CBC charge. Let me first calculate CBC percentage. There's no gross PPC, there's no gross gifted. So 53,000 becomes adjusted net income minus, let's make it more easier for you. Let's say this is your net income, and the same income becomes your adjusted net income. 53,000 minus 50,000 divided by 100. Whatever comes, it will be taken as a percentage. So I hope it is 30%. If it is 30%, then CBC charge amount will be 2,000 into 30%. It is 600. What this 600 does, it will increase income tax liability. So if couple they have received the child benefit, if any one of them is having adjusted net income more than 50,000, but obviously less than 60, if adjusted net income exceeds 60,000, then entire child benefit will become the child benefit charge. So if any one of them is having adjusted net income more than 50,000, then CBC will arise. And what CBC does, it increases income tax liability. So students, if you might have noticed that in today's class, we covered number of concepts, number of rules. As I committed in my first live revision class, that we are going to have a revision of the entire taxation, but obviously I need participation from the student. I'm just surprised why majority of the students, they are not coming for the live revision classes. So in the next live revision class, I'll announce something more beneficial for you guys. But please, live revision classes, I'll keep conducting, inshallah. But what I really want from you guys, at least try to complete all the pre-recorded lectures as soon as possible. What the tax implication of the transfer? I think the recipient spouse will get 1260, but what will be the HMRC due to transferred income? Because the only amount transferable is no. Please listen. For example, Mr. X is having 12,000 income, and let's say husband is having 12,000 income and wife is having 20,000 income. Okay. And Mr. X, and let's say they want to go for marriage allowance. If they want to go for marriage allowance, look at this. 12570 minus 1260. How much will be left? 12570 minus 1260. In that case, Mr. X will get 11,310. Is this clear now? If Mr. X and obviously his wife, they want to go towards marriage allowance, in that case, Mr. X will get personal allowance only 11,310. I hope I have answered the query. Yes or no, please reply. What is not possible? Mr. X says, first I'll get a personal allowance of 12,000. Then I'm left with 570. Then I'll transfer 570 to the wife. It is not possible. You can't transfer 570. If you want to transfer, you have to exactly transfer 1260. And your personal allowance will exactly reduce by 1260. So I hope that I have answered that. Let me write here more precisely what. Yes, the transfer is first. Agreed. 12570 minus 1260. So it was 11,310. So first is the transfer. So if the question doesn't say of no. Normally it will be mentioned. If husband and wife both are basic rate taxpayer, then go for the marriage allowance. If husband and wife they both are basic rate taxpayer, go for the marriage allowance. But provided that one of them is not able to utilize the entire personal allowance. This is the hint. Is that clear now? It's a basic tax planning. So please do. Okay, final question, sir. According to the notes on ISA, is everything about ISA exempt? Yeah, it's exempt, yes. Interest income, dividend income, capital gain, which I discussed today. So please do give the feedback in your WhatsApp group so that other students, they should come and attend these classes. See, when more students are going to come and attend these classes, it motivates the tutor. But at least those they are attending the classes, you people please keep coming for the classes, okay? So thank you very much. See you all in coming class, and that will be announced in your WhatsApp group. Don't worry at all. There's no need to ask. Automatically, admin will share each and everything. Obviously, there's no class tomorrow. Tomorrow I'm already having number of classes, so do not worry at all. Now you can see that we have started the live revision classes properly. So thank you very much. At least try to watch the pre-recorded lectures as soon as possible. Have a nice day.